Hey, this is Ken Finnan from Capital Advantage Tutoring. Like my hat, look at this. Feel free to go into my link and buy a hat, cool hat like this. I got trucker hats, I got shirts, I got mugs, I got shit. Go into my link and buy some shit. Today, we're doing another SIE exam. We're going through Achievable. They are the shit. They are the top with SIE. With the SIE, there's no one better. It's cheaper. If you're gonna pay for it yourself, go here. It's like $80, $70. Super quick, super tons of questions, simple explanations will change your fucking world. So let's get on this. So let's go. And remember something. I'll put the link up here. One of these sides, I have no idea, so I'll point to both. Let's get on this. But keep in mind, I haven't seen these questions before, so I'm taking it like you do. So the easiest way to do this is I've been saying this for years. When I take these exams, the question pops up, hit pause. Do it yourself. And then hear how I go there to my fucked up thinking about it. So let's get going, babies. Okay, here we go. We're going to start the exam, a mock exam, FINRA SIE from Achievable. I'll put the link there. Hopefully I'll keep doing it. Let's get on this. 105 minutes, 75 questions. Let's see if we can finish this. Boom. What is the primary benefit associated with opening a prime brokerage account? Why would I open a prime brokerage account? Access to multiple trade avenues while maintaining assets at one brokerage firm. Financing capabilities at the prime rate. Okay. Access to high-quality brokers, and added insurance against broker-dealer failure. Okay, so what's a prime broker? Prime broker is like in a hedge fund or somebody sets it up so they can have all their money in one spot, and then they can use various broker-dealers. Like, look at this little trick I can do now. This is awesome. So here we have, we'll call it maybe just a random firm called JP Morgan. We'll call you guy, we'll have a hedge fund over here. So this is a little hedge fund, we'll call it KF hedge fund, okay? That's me. I have all my money, and what I do is I hold it all in here, keep it there. But what they do is I have accounts with other broker-dealers, so broker-dealer A, B, C. I want these guys to execute for me. So I want to send an order here, and then I'll send it here, and then send it here. Do I want to keep moving my money from here to here to here and back and forth? No. So I keep it in one main thing called my prime broker, and as I execute, I do here, they buy stock over here. JP Morgan will send the money or receive the shares, and that's through the DVP, RVP account, which everyone always complains about. So the hedge, all my money's held with the prime broker, and as I do executions, it lets they're like a wheelhouse a little bit, like an Amazon, where they just send the stuff where it goes and then they settle. So that's the advantage of having a prime broker. So the answer would be access to multiple trade avenues while maintaining assets at one broker-dealer. Boom. Which of the following items must be disclosed on a U4? Okay, so what do I have to do on a U4? Debt levels, securities-related misdemeanors, charge was dropped 21 years ago, a banking job held 13 years ago, net worth. So which one has to be disclosed on a U4? So I don't think I have to do debt levels. I don't have to put my net worth. I don't have to do it. If I had a banking job 13 years ago, it'll be disclosed, but I have to disclose 10 years. So remember, residence is 5 years back, jobs are 10. And here's the deal on this. So a securities-related misdemeanors charge that was dropped. So you can't remember the whole thing about statutory disqualification. So they're going to disqualify you if you had a conviction within the last 10 years of a felony or a securities-related misdemeanor. But you still have to disclose all criminal activities. So that has to be that. A customer's account will be frozen in which of the following circumstances? The customer works in the finance industry, payment is not made for security purchase, they fail to provide suitability information, improper investment strategies are utilized. Okay, so let's see. Customer account, well, they can't, let's go to the bottom right. Improper investment strategies, well, you can't tell a customer what to do or what not to do, so boom, throw that out. They don't give suitability information. Yeah, big deal. What does that mean? That means you can't make decisions for them. No discretion. No recommendations either. Customer works in the finance industry. Well, that would suck, right? Just because we work in the business, we can't work. No, that's out. So if you don't pay for something, if you don't pay for a trade, they freeze your account. Is it a big deal? No, because really that just means normally you have 4 days to pay for something. T+4, right? T settlement. Not regular settlement, which is T+2. You have 4 days to pay for a trade unless you ask for an extension. If you don't, they freeze your account for 90 days. Doesn't mean anything. It just means when you do a trade during the frozen period, you have to pay for it up front. If it's a margin account, you have to pay 50% up front. If it's a cash account, you have to pay 100% up front. That's all it is. No, nothing crazy. Just says for 90 days. An investor does some fundamental analysis on the securities that they have in their portfolio. After looking at the company's financials, I move my ugly ass video out of the way, they discover the company is reporting significant amounts of intangible assets. Intangible you can't touch. Which of the following is an intangible asset? Okay, so bonds, inventory, vehicles. I'm going to go with patents. I could be wrong on this because I always suck at balance sheet stuff. But I think a patent is something you can't touch. Bonds kind of are, so I'm going to go with that one. Because a bond, do they mean we owe that or not? I don't know. I'm going to go with patents, but I easily see it could be bonds. The Federal Reserve is participating in a repo with member banks. Which of the following monetary policy goals are they pursuing? So they're buying. So Federal Reserve, when they're repoing, they're buying treasuries from the banks. So they're trying to give money to the banks, give money to the economy. So they're loosening, okay? Dissolving and strengthening, different things. Tightening is when they're selling. Loosening is when they're buying. Boom. Sell limit orders are used too. So what are sell limit orders? Sell limits are, remember slobs over bliss. Sell limits are above the market. So that's they're placed above the market. And they're really to take a profit. So let's see. Sell securities at a lower price? No, because I just fucking said they're higher. Sell securities immediately? Well, maybe, but that's a market order. Limit sales in the market? Have no idea what that means. And sell securities at a higher price, right? Because sell limits are placed above the market, baby. Slobs over bliss. Coupon is closely associated with which of the following? So the coupon. That's what we get paid, right? Okay. Bond premium? No, because that's the amount over par. If you want to think in a way, it's really called premium. Bond discount? No, that's trading below par. Market value? No, because that's where the market price is. The stated rate. Coupon, nominal, stated rate, all mean the same damn thing. Okay. Indications of interest are binding on neither the customer only, the firm and the customer. So I say neither. It's not binding on anyone. And we're back. Hope that wasn't too long for you. It wasn't too boring. Okay, if the S&P 500 index is down 4.5%, a 300% S&P 500 ETF would be, okay, so 300%, guys, is the same as 3 fucking X, okay? Don't freak out. 200% would be what? Oh, yeah, 2X, okay? So it's going to go 3 times the amount. So I got to do the math on this shit? Okay, so an S&P 500 ETF would go the same direction because it's not inverse. Market's down 4.5. Well, 4.5 is not an answer, so it has to be down 13.5. I'm hoping that's 3 times 4.5. Let's go. Laramie goes short 1 ABC Gen 55 put at Nueve when the market is at 56. 7 months later, Laramie closes the contract at Intrinsic. That's their secret way of saying in the money when the market is at 51. What is the gain or loss? So let's get this down. Intrinsic is how much in the money it is. So if it's a put, anything below the strike is intrinsic, anything above is not. On a call, anything above the strike, fuck the premium, we don't care about the premium. Short 1 ABC Gen 55 put at 9. So we sold it at 9. We have 9 buckaroonies in our pocket. Now, we close it at intrinsic, which means it's $4 in the money, so we buy it back at 4. It's the sneaky way of saying 4 without saying it. So we sold it at 9, bought it at 4. That is a $500 gain in my books, fellas and ladies. Okay. Which of the following ensures a payout to beneficiary if the customer dies during the accumulation phase? You croak while you're putting the money in, your family gets the money, and that would be called the death benefit. Okay, just mortality guarantee is just what you pay that you just, and you do an annuity, they pay you till you die. Mortality guarantee is kind of like they guarantee they're going to pay you when you die. They're going to pay you until you die. So you pay a little bit of interest for that because insurance companies don't lose money. AIR is a benchmark for variable annuities. You need to beat that to actually have your payment go up. An expense guarantee is just a guarantee that over the life of your annuity, even if it costs more to run the fund or the expenses go up, that's not on you. So again, death benefit is when you croak. Riley, second option. Riley sells 1 HD, April 145 call at 6, bought it in, so we're bearish. When the market is at 148, the intrinsic value of the option is, remember, because intrinsic fucking premium doesn't matter, so it's how much in the money it is. It's a 145 call, everything above it is intrinsic, so that's $3. The premium doesn't matter. I almost clicked 2, babies. Okay. An investor is interested in executing a non-drawable power of attorney on their accounts. An investor is interested, by the way, if you see it jumps a little bit, it's because I'm coughing like a fuckhead, so I don't want you to deal with that. And I'm saying the F word a lot. We'll see if I can curl it down. So wear headphones, earbuds, whatever. An investor is interested in executing a non-drawable power of attorney. So that means it ends at incapacitation, coma, shit like that, on their account. What statement is true? The power of attorney ceases to exist if the customer becomes incapacitated. I ruined that. Fucking spoiler alert. The power of attorney does not provide trading authorization to the attorney of fact. Yeah, it does. Power of attorney survives death. Nothing survives death. You're dead. You can't give it out anymore. And POA cannot be rescinded. Yeah, motherfucker, you can take it back. If you don't like what the person's doing, absolutely take it back. So the power of attorney ends when they become incapacitated. If it's durable, it goes through that. Which of the following underwriting commitments is done on a principal basis? Principal means using our own money. Firm, best efforts, all or none, or mini max. Okay, so let's go with, I'm going to take out best efforts because that's just going to do the best we can. Mini max is sell up to a number. We want $1 million, but if you get to 600,000, we'll go. All or none is sell it all or sell none of it. So not on the hook. So I would go with firm. Firm principal underwriting. Boom. Investment company shareholders typically have the right to vote for all of the following except. So shareholders, investment company shareholders can vote for everything but. Great question. I'm going to say they can vote for the investment advisor, the 12B. I'm going to go with management fees. I never know these little tiny rules. I should. I'm a compliance guy, but that's what the WSPs and that's what the FINRA rulebook is for, so I don't have to remember this shit. Okay, the third market is a function of which market? Okay. Dark pool market? No, that's the fourth. Primary market and IPO, same fucking thing. So we'll go with the secondary. What act covers that? Act of 34. What covers the IPO and the DIS primary market? Yes, Act of 33. Good. Which of the following is false? What are they lying about with the MSRB? MSRB rules do not regulate issuers. Well, that's true, because states are issuers of munis and they're exempt from all the fucking laws. MSRB has regulatory authority. We'll come back to that. MSRB rules regulate municipal sales. Okay. And the MSRB has rule writing capability. That's true. So we're going to say what's false is that they have regulatory authority. Because who enforces for the MSRB? FINRA and the SEC if it's a broker-dealer, Federal Reserve Board, the OCC, which is the Office of the Comptroller of the Currency, and FDIC regulated if it's a bank. So we're going to say it has no regulatory authority, so they're fucking lying. Which of the following best describes political risk? Domestic laws and regulations reduce the value of an investment. No, because that's not in the country. Political climate negatively affects an investment. I like that one. Changes in a foreign government reduces the value of an investment. And changes in the U.S. government reduce the value of an investment. So I liked this one at first, but I like this one better. This is like a dictatorship taking it over. That's all I think. Okay. A client of yours inquires about a primary offering of a stock they read about in an online publication. What statement is false? An IPO is a type of primary. That's true. The APO is a type of primary. That's true also. Typically requires registration if offered publicly. That's true. You got to register unless it's exempt. Issuer does not receive proceeds. Yeah, because that's the whole purpose of selling the shares, to get the money so you can go become Elon Musk and a billionaire. A 16-year 9% bond is quoted with a 9% yield to maturity. Oh, they're the same. What's true about the bond? It must be trading at parity. No, that's convertibles. Must be trading at par. We'll come back to that. Must be trading at a premium. No, because if a bond is trading at par, all yields are the same. So that also means if the yields are the same, it's trading at par. So that's a layup. The seller of the option is also known as what? Is it shareholder? Nah. Holder? No, because that's a buyer. An issuer? No, that's an issuer of stock. We'll go with writer. Write, sell, short, it's all the same thing. Opening sale. The first market is part of which market? The first market, you want to think primary, but it's not primary. It is part of the secondary market. So in the secondary market, there are 4 markets. The first, which is exchanges. Second is over-the-counter bonds and over-the-counter equity and over-the-counter bonds. Third market is over-the-counter trading of listed exchange listed securities. And the fourth market is just dark pools, ECNs, crap like that. So the first market is the exchanges. Don't get fooled between primary and first. They're different things. Primary market is new issues. First market is the stock exchanges. So we're going to go with this part of the secondary market. An investor purchases $1,000 par 26-year 11.6% bond at 89. So we bought it at a discount. The bond is callable in 6 years at 107, in 12 years at 103, and 17 years at 102. What is the bond trading at? Fuck. I bury the lead, or whatever you want to call it. Is it a parity, premium, par, discount? It is a discount bond. How do you know? Because the price is below 100. It's that simple. All this other stuff is just fluff to confuse you. What is the most common reason for market price fluctuations of bonds? Conversion rates of bonds, interest rate changes, stock market values, tax law changes. Okay. What's really the only thing that moves bonds? Interest rates. Interest rates go up, the bond goes down. Interest rates go down, the bond goes up. Long and low, baby. Remember, long-term bonds, low coupon, low price bonds move the most. Long and low. All of the following are considered a statutory disqualification for purposes of registration as a final financial representative, except a burglary-related felony conviction 8 years ago. Yeah, you're fucking out. A theft-related felony conviction 2 years. Boom, all felonies, you get knocked out. A theft-related felony arrest 8 years ago. Proof of false information provided on the U4. Yeah, you can't fucking lie. So, boom. Theft-related charge. Why? Because it's an arrest. You have to be convicted. Now, if you do have to disclose that. You're not automatically SD on that. Which of the following organizations are exempt from the Federal Telephone Consumer Protection Act? Pharmaceuticals, no. Local banks, small broker-dealer firms, nonprofits. Now, even though banks get away with a lot of shit, doesn't matter. Nonprofits is the answer. Nonprofits are the only ones that can call you anytime they want. They don't follow the Protection Act. What is it? Remember, this Federal Telephone Consumer Protection Act, a couple things. You can only call between 8 a.m. and 9 p.m. of the person you're calling's time zone. And if they say, do not fucking call me, you have to put them on a list right away. A 20-year 5.8% bond is quoted at 5.9. Okay? I'll try not to bury this. What is the order of yields from lowest to highest? So if the coupon is lower than the yield, if you go on the bond triangle, right, we know the bond triangle. I love the bond triangle. I'm going to do it here. Waste your time. Is boom, boom, boom. Left side is discount. That's the D. Okay? So I know on a discount it goes coupon, current, yield to maturity, and yield to call. And then on the premium side, which is the P over here, is premium is going to be up here is the coupon is the highest, then current, then yield to maturity, and then yield to call. So the way you look at this, okay, so you look, what is this? This is the coupon, and then the yield is higher than that. The only one where the yields are higher than the coupon is the left side, which is a discount, so it has to be a discount. Boom, boom, boom. So the lowest is going to be coupon, or nominal. It's another word for nominal, because nominal, current, that yield to call doesn't work. Nominal, current, yield to maturity, yield to call, boom. Which of the following statements regarding the characteristics of rights and warrants is false? What's not true? I always screw these things up, not the rights and warrants, but the false. Because what happens is you start looking at it and going, okay, I start looking at, I find the false, and then you forget that it's a false, and then you see a right one, and you grab it. So I always say, on a piece of paper, right to the side, whenever you see the word accept or false, when you first start, write the word accept big on top of the paper. And then whenever you see the word false, accept, not, take your hand off your mouse and put it on that word to remind you that it's an accept question. Which of the following statements regarding the characteristics of rights and warrants are false? Okay. Rights typically expire in 90 days or less. We'll come back to that. Warrants are generally issued as a sweetener like a little candy. Warrants typically expire 30 days or less. That's not true. Rights are generally issued to allow shareholders to maintain proportionate ownership levels. Spelled wrong, but that's fine. So my mind filled that in. I'm sure yours will too. So the answer is warrants are usually 5, 7, even perpetual. They're not 30 days or less. Remember, rights are short-term, warrants are long-term. Rights are issued with intrinsic, warrants are not. Into the next question. All of the following U.S. government issues are quoted on a percentage of par basis except Treasury bonds, Treasury notes are, tips would be, so Treasury bills. Treasury bills are a discount yield. Remember that, discount yield. Stay awake, guys. Come on, stay awake. We got this. Okay. An investor wants to make a contribution for tax year 2020. What is the last date the contribution can be made and applied to 2020? So I want to put money in my IRA, I guess. Okay. So for 2020, I have until April 15th of the following year to put it in. So even though 2020 is gone, I can put it into April 15th or really tax day, which is normally the 15th. Boom. Oakley Glasses believes that their stock price currently at $242 a share is too expensive for the average investor. So it's a marketing tool. Which of the following choices would be the most efficient solution? Rights disbursement, never heard of that. Reverse stock split, no, that would make the stock more expensive. Cash dividend is you giving people cash. Okay, I'm okay with that. That wouldn't lower the price. Forward stock split, if you do a 2-for-1, baby, you knock this down to like 121. But you get more shares. Okay, so I'm going to go with the stock split. That's like a marketing tool to make a stock cheaper. Which of the following securities has a resetting coupon and a put option at par? Badass put option. Collateral trust, no, that's just backed by, that's just a bond. That's backed by securities. Cumulative preferred, no, that's a preferred. That just, if you miss a dividend in the previous years, you have to make it up before you pay the common. Pre-emptive rights, no, that's just what you get if you're a shareholder and they do a rights offering. Variable rate demand obligations, obviously. VRDNs, whatever you want to call them. These are variable rate, which the coupon moves with the rate, so there's no interest rate risk. And at any point, you have a put option in there that you can sell it back to the issuer at par. So that it'll never trade below par. And so this is a long-term bond that acts like a short-term because you can make it look like a short-term bond by just selling it, issuing the put option. Good. Okay, we're a little over half, a little over a third. Alexis is a 42-year-old, banging through this. Alexis is a 42-year-old single customer of yours that makes $291,000 a year annually. Not bad. They want to open a Roth IRA, you should tell them you're out of fucking luck. They may contribute but not deduct contributions. Nope. They may contribute up to $6,000 a year. Nope. They may contribute up to $7,000 a year. Nope. They are ineligible. Yeah, they make too much fucking money. Roth is for the poor people of us. Those make under 130. Or for a couple, there's more, but she's single. Which, by the way, guys, don't worry about the numbers because it's like 131. They'll always put way below or way high, so you won't have to go, wait, is it 140? They're going to go, hey, like 290, 300 grand a year, or the person makes 50 or 60. So then it's full on. It's not like a borderline thing. Which of the following types of customers would be best suited for a guardianship? Incapacitated, risk averse, customers with no market knowledge, minor children. Nope. So a guardianship is usually one where the court sets it up, and that would be for an incapacitated customer. Good. Good job, guys. All of the following are valid corporate bond quotes except for, okay, 3 ace, 102 and 6 ace, 75.5. If you guys took any kind of math in high school, you would know that you always have to knock your fractions down. So 6 ace would really, wow, I can't speak. 6 ace would really be 3/4. So that's what, even though it's an ace, they will bring it down. So 6 ace is no good because that's really 102 and 3/4. Broker-dealers must maintain certain books and records according to financial rules and regulations. Which of the following records requires a 5-year retention period? CTRs, fingerprints, institutional customer complaints. So let's see. I have a feeling I know what it's going to be. Institutional communications would be 3 years. Customer complaints is 4. Fingerprints, I think, is 4. I'm not sure on that. But I'm going to go with CTRs because that's all about money laundering and crap like that. I'm going to guess 5. I don't remember. Again, I look shit up. That's all I do. Hope you guys are liking this so far. If you do, please reach out to Achievable, get their product, give a little free trial. They give you a free peek for a little bit. It's really good stuff. I love them. I love them a lot. And if you don't want to do that, buy a fucking hat, my man. Okay. Which of the following investments allow for flow-through of losses and gains? Okay, flow-through means you're owning it, and any gains that come through go directly through the company to the investor or the partner. and any losses go through. Now, when you hear losses, it doesn't always mean a bad thing. Losses sometimes mean just write-offs and stuff like that. So REITs know they pass through gains, not losses. In a way, they pay dividends. Mutual funds pay dividends, and ETFs do. So the answer is, whenever you see pass through, it's either going to be a CMO or a DPP. Good. Rylan buys a 12.9% bond at 119. What is the current yield? Ooh, we got to break out the calculator. So how do we do current yield? We're always going to do current yield is always going to be, where's my calculator? Because I can't, don't ever do shit in your head. Current yield is coupon or nominal over market price. So I'm going to do 12.9 divided by 119. That would give me 10.8%. That's what that looks like. Okay? Good. So it's really going to be 10.84 because I rounded in my head. An affiliate may sell the maximum. It's 11:30 at night. That's why it's crazy. And my voice is totally gone. I'm trying not to cough. An affiliate may sell the maximum allowed shares as per Rule 144 how many times a year? Okay. So if you remember this, I'm going to do a little handy dandy chart just because I'm bored. Not bored, just when I do stuff. So remember this as Rule 144. Oh, well, we're excited. 1, 4, 4, 4. You can sell the greater of 1% of the outstanding or the 4-week trading volume, whichever is greater, 4 times a year, which is every 90 days. So there's our answer, okay? But let's make sure I read it right because sometimes they're easy and you get it wrong. An affiliate may sell the maximum allowed shares as per Rule 144 how many times a year? 4 times a year, which is every 90 days. An investor is learning about risks related to different investment styles and securities. Which of the following statements made to this investor are considered false? Which ones are they lying about? Okay, so non-systematic risk can be significantly reduced through diversification. I'll go with that one. That's a true statement. Over-leveraging, yeah, whenever you over-leverage, just talk to me on my bank account, can result in business risk. Absolutely. Exchange-listed securities are generally not subject to liquidity risk. Okay, I'll give you that one. And purchase of our risk is considered a systematic risk. Interesting. Non-systematic risk can be significantly reduced through diversification. That's true. Over-leveraging can result in business risk. I agree with that. Purchase of power risk considered systematic risk. Exchange-listed securities are generally not subject to liquidity risk. Okay, I'm going to have to say, because purchase of power risk is sort of systematic, because if you have a bond, you're getting it, right? I'm going to go with this as a thing, because technically, I mean, I always think exchange is not liquidity risk, but I guess you really can't say that. Okay. Which of the following order types fill when the market rises? Which of the following order types fill when the market rises? So which orders are placed above the market? Buy limits and sell stops? No, because remember, slobs over bliss. Sell limits and buy stops. Find that. Oh, boom, there we go. Sell limits and buy stops. Dead noise, that's not good. 54. Raleigh is a 67-year-old recent retiree from a long-held job and has begun to receive pension benefits of $60,000 annually. Good for her. Raleigh still wants to work, so they obtain a new part-time job paying $3,000 annually. How much can Raleigh contribute to her IRA? I would say you can contribute what is considered your income. Earned income? I don't think pension benefits are considered earned income. Could be fucking wrong. I'm going to go with 3 because you can pay up to 100% of your income, up to $6,000 a year, but at 67, they can do 7, but they only made 3. Why bother? On what schedule does preferred stock typically pay dividends to investors? See, I say quarterly, but they're going to say semi-annual. I'm going to go with semi-annual because I think that's what they do. But I know that they can pay quarterly or monthly. So that's not a real question. Okay. Trading authority is also referred to as POA, TOD, TIC, WROS. WROS is with rights to survivorship, which is like both people own the account. That's out. TIC is tenants in common, where we both are partners, but the money goes down to our children. Trench run death is when you have a single account and you list somebody who's going to get the money when you die. That avoids probate. So does rights to survivorship. POA, power of attorney. That's trading authority. And there's full and limited. Full means you can do trading plus touch the money. Limited means you can do the trading but can't touch the money. Participating UITs are also known as which of the following? Well, they're under the Investment Company Act of 40, FUM. It sounds like fun. FUM, face amount certificates, unit investment trust management companies. So it's not a mutual fund. It's not a face amount certificate, and it's not a publicly traded fund. So participating UITs are also known as variable annuities. Wonderful. Tenants in common accounts. Just so you guys know, on the real exam, they usually will write that out. They won't always put the initials. They may, but for the most part, they write this shit out. Tenants in common accounts are considered what type of account? Are they business? No, they can't be, because businesses can't have joints. Margin, yes or no, but it's not what it is. Fiduciary, no. Joint account, because it's really a joint tenants in common. Perfect. Joint tenants in common means that if you and I have a partnership, if I die, my money goes down to my family or estate or heirs or children. And if you die, your money goes to your estate or heirs or children or whatever it is, or beneficiaries. So joint account. We're past halfway, babies. A customer holds 600 shares of stock at $4. How many shares will they hold after a 1-for-2 reverse stock split? So they're going the other way. Remember, always reverse splits are usually a bad sign. And reverse split, you're gonna have less shares worth more. So it's 1 for 2. That means you get one share for every 2 you own. I own 600. I am now gonna get less. It's gonna be 300, and the price is gonna go up to probably 8. So where's the 3? There it is. Intrastate, not intrastate offerings may not be resold outside of the state issuance for a period of, okay, so most holding periods are really standard. Is it 3? Is it 9? Is it 12? Is it 6 months? 6 months is the holding period, okay? Remember that whenever there's a holding period, for the most part, is 6 months. Reg D, 6 months. Intrastate under Rule 147, you can't sell it outside the state for 6 months. You can sell it inside the state whenever the hell you want. But remember in your mind, whenever there's a holding period, it's most likely 6. It's right. It's 6 months way more than it isn't. Which of the following dates for a cash dividend will a tax report be created? Which of the following dates? Okay, so they're asking, when do you owe taxes on a dividend? Record date? Nah, that's the day you're in ownership. X date? No. Declaration date? You're not going to get paid taxes, just say announce it. Payable date? Remember, you pay taxes when you get paid. So if they declare the dividend in December, but they don't pay it till January, it's the new year, not the old year. Boom. What is the formula for a bond's nominal yield? Nominal is the same as coupon, stated, interest rate, all that crap. So it's going to be annual interest over par, because it's basically the coupon, so it's the annual interest over par. Boom, there it is. Love it. It's not over market price. This is current yield. And this is not anything, and these are not anything. Commercial paper has a maximum maturity of now. They can be as long as they want, but to be exempt from registration, they have to be 270 or less. Because if it's 270 or less, SEC doesn't give a shit. They're too short. What is a maximum allowed gift a registered rep may make to a colleague that also works in the industry? Well, it's not just, it's basically a gift to anyone, right? So if you want to give a gift to someone at your own firm, there's actually no limit. But if you want to give to someone outside of your firm, it's a $100 limit. I'll tell you a quick story. When we were this is just sort of stick. About maybe 15 years ago when I was on the stock exchange floor, we had a bunch of customers, and one of our traders came up with the greatest idea. They came up with this nanopod, which was $99. So he bought one for every one of his customers. It was pretty new. It was pretty cheap. Everyone loved it. But when we reported it, FINRA goes, wait a second, with sales tax, it's 106, okay? With sales tax, it's over 100. So we actually had to go up and testify that we bought it. The sales tax doesn't matter because it's not part of it. And they agreed finally. They weren't total jerks. It was just they weren't reading the rule differently. When we got to the upper people, they go, no, just let it go. It's not a violation. But if we didn't, we would have been in violation 82 times because we bought 82 iPad Nanos. Okay. So $100 max. Federal funds, if you guys hear barking, because I didn't hit the button because my son's about to go home and Teddy Boy is going to start barking his head off. So I'm telling my son. Federal fund loans typically cover what time period? Fed funds. Okay, so let's talk about it. So there's there's the discount rate and the Fed funds rate. Both of those are considered overnight. They can be up to a month. Fed funds is usually overnight. Discount rate can actually be extended to a month, but it's normally an overnight rate. So we're going to go with overnight. It's short-term lending. Charges assessed by the SEC to insider traders are payable to which of the following? Great question. Do they pay to the FBI? No. MSRB, SEC, Treasury. You would think the SEC, but you pay to the Treasury. Well, while I'm waiting for the disruption of my son coming home, let me pitch to you a little bit. I have a membership program, which is awesome. If you want my options, not so much for the SIE, but for the 7 and on, my options thing for $10 a month, you get access to my options, which will change your goddamn life. Absolutely change your life. You will love options after this. So videos, this is gold. In January, I'm changing it. I'm raising my prices. For $25 a month, the mid-level one, you get that, plus my once-a-week Zoom call on Sunday nights. Now, again, for the 65, 63, 66, it's at 6 to 7. And for the 6 to 7 in the SIE, it's 7 to 8. It can be one person, it could be 30 people, who knows? But it's part of the package, and it's back and forth, and I publish them. You've seen the membership classes. The big one, the $100 one, is that. Plus, every other Tuesday, I do a live Zoom call for the max of 2 people per lesson. So it's really worth it. It's some good stuff. So let's see what happens. And we're back. Broker dealers. Hopefully I did a good job where you can't really tell. Broker dealers must keep all of the following recordings on file for the lifetime of the firm except meeting minutes, articles of incorporation, CIP, stock certificates. So remember, anything to do with forming the actual broker dealer company is going to be lifetime. So meeting minutes, board meeting minutes, obviously, articles of incorporation, and stock certificates, yes. So the CIP, customer identification program, is not the answer. Good. Okay. A registered rep is approached by a client that is considering an investment in an ADR. During the conversation, the representative discusses the characteristics of this type of investment. Which of the following statements is considered false or misleading? So which one is he not telling the truth? Foreign taxes withheld on ADR dividends result in tax credits? Maybe. Although ADRs trade in US dollars, they are subject to currency risk? Yes. ADRs are typically created by foreign issuers. We'll come back to that. ADRs do not provide voting rights. Okay, so I'm going to go ADRs are not created by foreign issuers. They're created by US issuers issued here, but they represent foreign companies. Well, I'll be wrong. It'll be ADRs do not provide voting rights. The Securities and Exchange Commission enforces the rules and regs of each of the following laws except Trust indenture, federal law. Securities Act of 34, federal law. Securities Act of 33. Let me go through this. 33 is new issues. 34 is secondary. I have videos on that. I'll try to put them here. Trust indenture Act of 39 is for non-exempt bonds. USA, Uniform Securities Act, is for state laws. So they don't mix. Okay. A customer wants to place a sell order for 275 shares of Bank of America stock at $28 or better. They want an immediate execution plus want to sell all 275 shares. So I would say that means they're not willing to take a partial. What type of order should be placed? So it's a sell at a limit, and I want immediate, and I want all of it. So is it all or none? Sort of, but they want immediate, so maybe that's not the answer. Sell stop, no, they didn't say anything about a trigger price. Sell limit AON, again, not all or none. FOK, fill or kill. So that means sell it all at 28 or sell none of it and cancel it right away. I'm going to go with that. If I read it wrong, I apologize. Which of the following statements regarding preemptive rights are incorrect? Which ones are wrong? Rights have intrinsic value at issuance. I've already said that, so they do. They're issued at a discount. One right is provided per share stock owned. That's true, but you may have to hand in more than one right. Rights have a little time value additions. We'll come back to that. Rights offerings are typically connected to initial public offerings. That's not the answer, because it's with additional offerings, not initial. Because if it's initial, how can they give it to someone who owns the stock? I love it. How often do Treasury auctions T-bonds? I'm going to say, if I remember right from my memory of reading the book fucking 200 years ago, quarterly. I think T-bills are weekly, T-notes are monthly, T-bonds are quarterly. I can check that, but I don't care. You can look it up too. SIPC insurance details must be disclosed to clients at what point? I would say at or prior to opening. I could be wrong. It could be right after, but I'm going to say at or prior to opening to let them know that they have SIPC insurance. And every broker dealer has to have a sign posting that it's there, that they're covered by SIPC, even if they're not. It's crazy. Account statements are sent to customers in order to disclose previous account activity and current balances. Which of the following statements is true regarding statements? Now, this is everyone's confused by this. There is actually no law saying it has to be monthly. Most firms do that if there's activity, but the rule is quarterly. Quarterly statements must be sent if penny stocks exist in the account. Okay. They must be kept on file for 3 years. The most recent year statements must be readily available, and annual statements must be sent if, okay, so bottom left is out. Top left is out. 3 years. So I think customer statements are 6 years. That's what I think, because I think big sacks. So I'm going to go with the most recent year statements must be readily available. I think that's the right answer, only because I don't love the answer, and that's, understand, guys, this is a valuable way to answer questions, that if you can knock out 3, the last one has to be the answer. Okay. And that's why people feel like they're failing all the time, because you do a question like that and you're like, I'm not sure, but it is right because you can't do anything about it, but you're just going to feel uncomfortable. TGT stock is trading in the market at 76.05, while TGD's 75 call contracts are trading it for 563. What would the customer pay for 4 contracts? So we have to do more math. I'll use my Samsung calculator this time because it's easier to find. I think, maybe not. Okay. Let's get the calculator open. Why would that actually happen that way? So we're going to do the calculator. We're going to do, so pay 563 times 100, because that's how much per share. So it's 563 per contract. I bought 4 of them, right? Times 4 equals 22.52. That better be the answer. Boom. Okay? So $5.63 per share times 100 shares is 563 times 4 is 22.52. Let's hope that's right. I'd be embarrassed if it was wrong. Which of the following statements is true about hedge funds? Hedge funds, I love. They're subject to liquidity risk. I'll give you that. They are not suitable for wealthy and sophisticated. Yes, they come with high risk and high potential returns. Yeah, I give that one. I'd say all of them. Maybe I'm wrong, but they do have liquidity problems because they have lockup periods, and they say, I had a friend of mine who ran one, and you could only get out of it if you gave them a warning. You had to tell them you wanted to take it out, and then it would be the next quarter, and they could still say no if they needed the money. Okay. Which of the following best describes the act of money laundering? Ooh, watch Ozarks. Okay. Concealing the source of money, stealing money, embezzlement, identity theft. No, you're concealing the source because you're getting money through illegal gains, illegal whatever it means, whatever it is, and then you're putting it in, you're placing it in the system, you're layering it to get some distance with it, and then you're integrating it. So you're trying to put some distance between what you got the money, trying to hide the money, trying to put it in the institution so it'll get like hidden, and then you can take out clean money. How often are mutual funds required to send financial reports to their shareholders? I think, if I remember right, that's semi-annual. I don't know. I could be wrong on this. Some of these little details shit I don't care about. Here we go. I should care, but I don't. Which of the following titles would be ethical for a registered rep to use? Senior Investment Authority, Senior Citizen Specialist, Certified Senior Advisor. Interesting. Certified Financial Planner. So, I'm tough on this one because are they saying that he has a CFP and he can get it? Or he's just Certified Senior Advisor? I don't know. You could be a Certified Senior. I think you'd be a Senior Planner. I don't think certification. I'm going to go with Certified Financial Planner, a CFP. But it easily could be Senior Advisor because there's a nuance there. Which of the following is a best efforts underwriting? Best efforts is we're going to do the best we can and give it all back. Standby, principal, firm, all or none. All or none is the answer because you're going to do all of it or none of it, and if you don't do any of it, you give it back. That's best efforts. Best efforts means the underwriter is not on the hook for the sale. The issuer is. Treasury receipts and strips avoid what risk? Okay, so they're both long-term zero coupons. Strips are actually issued by the government. Treasury receipts are using treasury bonds and issuing long-term zeros. Let me back that up. Treasury strips are issued by the government. Boom. They're long-term zero coupons. Treasury receipts are issued by banks or broker-dealers where they buy treasuries and then issue zero coupons based on that underlying collateral. But what they don't have, either one of them, is reinvestment risk because there's nothing to reinvest because it's a freaking zero coupon. Which of the following statements regarding the characteristics of a stock investment are true? Common stock is redeemable. Preferred may be convertible. That's true. Settlement time for settlement time for a trade of preferred stock is T+1. No, because everything's T+2 except for options and treasuries. Common stock is a derivative. No, derivatives, things are derivatives of common stock. So I'm going to say the only thing that's true here is preferred stock may be convertible because common stock is negotiable, not redeemable. Remember, everything's either negotiable or redeemable, not both. ETFs are structured as which of the following? Closed-end management companies, open-end, fixed UITs, and participating. Look, they act like a closed, but they technically are open. I'm going to go with that one. I could easily see it being this one. But they are open-end because you can always add more shares if they have to. I could see them saying closed-end. I'm hedging here myself, but whatever. What is a primary difference between a strip and a treasury receipt? Issuer. Because the strip is issued by the government and a treasury receipt is issued by a broker-dealer. They sort of have the same backing of treasuries, but that's it. Okay. If a company wants to sell stock to the public, they will hire a credit union, mutual fund company, commercial bank, or investment bank. They will hire an investment bank, which is the underwriters and all that investment banking. Like some of you may have to take the 79 after this. Bitch of a test. Which of the following statements regarding an able account is true? Able is for disabled, right? Okay. To be eligible, the person must be disabled by 30. No, I think it's 26. Contributions are always tax deductible. I don't think so. Distributions are tax-free if used for qualified. I think that's the answer. Because usually the able, Roth, 529, all these things, I think the money goes in after tax. I'm going to get beat up on this test because I'm taking it at 11 o'clock at night, which none of you should ever do. You and your client are having a conversation about preferred stock. Which of the following statements made by your client is false? Which one are they not telling the truth on? And the last question they're going to get me. Preferred stock received dividends prior to the comment. Well, that's true. Prices of preferred stock react to interest rate changes. That's true. Preferred dividends are legally required. Preferred stock does not have voting rights. That's true. So the answer is they're not legally required. That's why preferreds have a higher coupon than a bond. Because a preferred stock, the interest payment, the dividend payments are not guaranteed. So they can't really do much. If the investors can't really yell at the issuers, if they don't pay it, they can just get mad. But if it's a bond, they have to pay. Because if you don't pay your interest payment, they can sue you. So I'm going to go with this one, and let's see. Drum roll, I'm scared. 95. How many get wrong? Where'd it go? Where's the red, baby? I got 4 wrong. We got to find this shit. Okay, oh, there it is. I see. They don't turn red. Okay. Let's find them, baby. I'm going to go through it quickly. Boom. Where did I get the 4 wrong? I am not happy. Sounds arrogant, but I do this, so I should be better at this, right? Okay. I bet you all the ones that I wasn't sure about. Good. Yep. Where's the red? See, you should go through, like if you go through these, like when we open it up, the ones I got wrong, I'll open up and we'll go through the explanations. Because I think I explained most of these. I get them all at the end. I'm already on the 3rd throw. Unless if you guys see a red one, let me know. Quiet time. Uh-oh. Probably got them all in a row. Oh, here we go. Here we go. So an investor is learning about risks related to different investment styles and securities. Which is false? Oh, yeah, okay. let's go with why. Okay, so I guess exchange is true. Okay. Why do they say over leveraging is not business risk? Okay. Okay, fair enough. So financial risk is when they over leverage, not business risk. I conflate them. It's fine, my bad. So business risk is when a company's revenues fall due to competition or mismanagement. Always, whenever you get something wrong, even the right ones, kind of look it up. I'm not doing it because I'm lazy and it's midnight. Okay. What did I do? Ah, I'm an idiot. See, speed kills. This, I said the right thing. Sell stops and sell limits and buy stops, which is slobs, and I clicked the wrong thing. That's a mistake, right? That tells you how doing things fast is hurting you. It really does. You got to make sure that you do stuff at a fair speed and don't screw up. So that's 2. I'm worried. Heart's racing. I don't want to be embarrassed. Where are we? Oh, I'm glad I got that one right. But I get a bunch at the end. I got 2 wrong at the end then. Oh, here we go. Okay. How often does Treasury bonds do quarterly? So I always thought they were, okay. There you go, monthly. Good to know. Just because I'm a vindictive prick. Here's the thing. So Treasury bills are done like weekly on a schedule. Treasury notes are done on a weekly on a schedule. So here's the Treasury bonds. They are done February, May, August, and November. So February, May, August, and November. So it's about every quarter. So I'm not 100% wrong. It's at the end of that month, but T bonds are done every February, May, August, and November. So I'm going to give that back. I'm going to give that back to me. Okay. Which we found is true regarding statements. They must be kept on file for at least 3 years. I just looked it up. I'm going to fight this one too. I'm going to reach out to them. I still think it's 6 years. Quarterly, never really monthly unless it's penny stocks, okay? It should be, I just tried to look it up. I think it's 6 years unless I'm reading it wrong. So I feel better about myself. Boom, because it's all about me. I think I should, yeah. I think of that, the CFP, Certified Senior Advisor. You can be a senior specialist, I think, if there's certain, there's some venue to that where they have to have some sort of training. Open end, right? ETFs are considered open end. And we are at the end. I love it. So not bad. So technically I got closer to a 97, 98. I'll take that. Makes me feel better, even though I don't like getting any wrong because I'm just cocky and that's I do this for life. Guys, thanks. I tried to keep it under an hour. I'll see with the edits how much, if it is. I try not to take too long. I don't want to waste your time. I know it's hard to listen for this long. Thanks for making it this long. Please go down to the links. Check out Achievable. They're fucking rock solid. They're awesome for the SIE. They explain stuff. Brandon Rith is a great guy over at Basic Wisdom. He has some great videos, and we'll go from there. I'm going to try to put another one out. I have another one coming out that I wrote all the questions. They're rock solid to like pretty damn close style of the test, like scarily good. And we'll go from there. Great. Guys, please reach out if you have any questions. Please hit like, subscribe, share, all that crap. Love it. Please tell people, tell your bosses, tell your registration. I'm just trying to drop gold here.